One Wall Street bank says Take-Two stock is going to $368. Another says it crashes to $170. They cannot both be right. GTA 6 is the single biggest catalyst gaming has ever seen, and it is about to make somebody very rich and somebody very wrong. So let us put the chart up and figure out which side the tape is actually on. Quick disclaimer, this is entertainment, not financial advice. Now let us get into it. First, understand what you are even looking at. This is not a normal stock. Take-Two Interactive is worth about $44 billion, and let us be honest about what that number really is. It is a giant bet on one game. Yes, they own Red Dead and NBA 2K, but the entire stock right now lives and dies on Grand Theft Auto 6. Nothing else moves the needle like this. Here is the part nobody wants to say out loud. On paper, Take-Two is not even profitable. Its price-to-earnings ratio is negative, around -147, because it is posting accounting losses, why it pours everything into GTA 6, a $44 billion company that loses money. Either that is insane, or it is the best setup in the market. There is no in-between. And this is why bulls do not care about the losses. The company guided to roughly $8 billion in net bookings for the fiscal year that GTA 6 launches into. $8 billion. That single forecast is the whole thesis. If GTA 6 delivers it, the stock is cheap. If it whiffs, their $44 billion is a house of cards. Enough talk. Let us read the actual tape, because the chart is telling a story most people are missing. Here is the weekly chart. Follow the line. It ran all the way to an all-time high near $265 last October on pure GTA 6 hype. Then the delays hit, and it got cut down almost 30%. It bottomed near 188, and it has been clawing its way back ever since. Today it sits around 238. Now look at that bottom. The stock hit 188, bounced, came back down, and hit it again. That is a double bottom, and it printed on enormous volume. That 188 level is the line in the sand. As long as the stock holds above it, the bulls are in control. Lose it, and there is a lot of air underneath. Price is now back above both its 50-week and 200-day moving averages, which is bullish. But here is the catch nobody mentions. Those two averages have not crossed back up yet. So the trend is recovering, but it is not confirmed. The stock is standing on the trapdoor, and the trapdoor has locked shut. That detail matters. And straight ahead is the wall. There is a thick band of resistance between about 242 and 250 where the stock keeps getting rejected. That is the gate. Break above 250 with conviction, and the path opens back to the all-time high at 265, and then it is blue sky. Get rejected again, and we chop. So here is why one side of Wall Street thinks this thing is about to go vertical. Bank of America just sapped a $368 target on this stock. Their logic is spicy. They think GTA 6 Online, with a paid progress model, will get players spending way more than a cosmetics-only game like Fortnite. They raised their online bookings forecast by nearly $1 billion. If they are right, today's prices are steal, and the macro case is simple. GTA 5 sold over 200 million copies and printed money for over a decade through GTA Online. GTA 6 is shaping up to be the biggest entertainment launch in human history. The bull case is not complicated. You are buying the most valuable franchise on Earth 5 months before it prints. So here is my bull scenario, and this is speculation, not a promise. If the stock breaks 250 before launch, takes out the all-time high, and GTA 6 Online turns into the cash machine everyone expects, a re-rating to $300 and beyond is absolutely on the table. The whole street would be chasing it up. That is the dream. But now let me make you nervous, because the bear case is more dangerous than people admit. Here is the uncomfortable truth. Everybody already knows GTA 6 is coming. It is the most anticipated thing in the world. So the obvious question is, how much of that good news is already baked into a $44 billion valuation? Markets price the future. When the whole planet is bullish on one event, that event is usually already in the price. And here is a real warning shot. When pre-orders finally went live on June 25th, the stock actually dipped, because the price and the details underwhelmed some of Wall Street. Think about that. The hype event itself was a sell. If the actual news cannot push the stock up, what happens when there is no news left to wait for? This is the oldest move in the market. Buy the rumor, sell the news. Traders ride a stock up for months on anticipation, and then dump it the moment the thing actually happens. My realistic fear, and it is speculation, is that the stock grinds up into November and then gets hammered on launch day itself, even if the game is a masterpiece, a retest of 200, or even that 188 low, would not shock me at all. So let me give you the controversial take that the perma-bulls are going to hate. Here is my honest read. The chart says the path of least resistance into launch is up, higher low, back above the averages, recovering. But the single most dangerous day to own this stock might be the day GT's A6 actually releases. The catalyst everyone is begging for could be the exact moment the smart money cashes out. The setup is bullish. The event is a trap. Both can be true. So forget the noise and watch three numbers. 188 is the floor. Lose it and the bull thesis is broken. 250 is the gate. Break it and the all-time high is back in play. And 368 versus 170 is the war between the biggest bull and the biggest bear on Wall Street. The chart will tell you who wins before the headlines do. And to be crystal clear, this is entertainment and my opinion, not financial advice. I'm not telling you to buy or sell anything. Do your own research and never bet money you cannot lose. But I have to know, are you team 368 or team 170? Drop it in the comments. And subscribe, because I am tracking the stock all the way to November 19th. I will see you in Vice City.